Hello, 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 everybody. Stephen Mead for Domicile Real Estate for people who love houses. We're kind of doing this update on a Wednesday morning. I'm sorry we're a little bit late on this one. We kind of had some issues putting the stats together, and we wanted to double check a couple things. This is our Southern California housing market update, and it is for June 23rd, 2021. And I just want to talk a little bit about why we do these updates weekly. If you look in the newspaper or you look at a lot of the organizations, they like to give market updates every month, right? Like, so in the newspaper, they're talking about all the sales that closed last month and what was the median price and all these things. And I think in a market like this, I don't think that information is terribly useful if you are somebody in the real estate market actively trying to make decisions about what you're doing. And the reason why I think that is because I think our market shifts very quickly, and it has what I'm going to call micro shifts, meaning that we have week to week changes in our market that really can affect your strategy. So, 1 week I might tell a client, you're going to need to go a bit over list price just to get counter offers. And the next week I might say, I think they'll counter us no matter what if what we write is at least pretty decent. And we've had that range of motion week to week in where the market is and the advice that we've given clients. And so, one of the things that right now, and we'll get into this, that really affects sort of our week to week market stats, especially on the low end, is interest rates. So in a week where interest rates ease up, we have a sudden jump in activity and price levels. It's almost like clockwork in this market. It's really interesting to watch just how reactive consumers are. So without further ado, let's jump into the stats. And I'm going to tell you a little bit about the reason why this is a very difficult to predict market and why you really need to pay attention week after week. So let me jump into those here. Okay, so let me go back to the beginning. All right. Our first thing that's kind of a little bit noteworthy is total active listings. You notice our blue line here is for under $1 million, and our red line is $1 to $2 million. And, we actually have sort of a trend that's diverging, right? And if you look here, towards the beginning of the year, we got a bunch of new listings in the market. They all got eaten up. And then really we've been kind of sitting, both of these price categories, we've been sitting in sort of this inventory trough. And then we started maybe a little over a month and a half ago, those inventory numbers started going up, both under $1 million and $1 to $2 million. But what I find fascinating is when we look at what's happened in the last week. In the last week, we've seen it continue a little bit of a rise in our $1 to $2 million, but we've actually seen a little bit of a drop in our under $1 million. Now, it's not a huge drop, and we're still at a level that's better than it's been for most of the spring. But that's a clue, right? Like whenever you see something shift in direction, really it can be one of two things. It can either be noise in the data, and when you look here, you'll notice none of this is perfectly smooth, right? Like there's little ups and downs, and you wonder, is this just a little down that's going to rebound next week? Or it can be a sign that something happened, right? That something sort of, the winds shifted a little bit in a market. A couple of weeks ago, I would have told you that we were absolutely on a little bit of a cooling trend. Inventory was steadily rising. I mean, you look, this is a pretty positive looking trend here until a week ago, and then suddenly it wasn't. Now, if we move on to our new listings, we see that we had a real drop in new listings, but again, this was around a holiday weekend, so I'm not entirely sure, how much we can go on this dip, right? See right here, right around Memorial Day weekend. And it's been largely flat. I mean, really, we have seen, if you drew a trend line across this, we have pretty much been at the same level of new listings since March. It accelerated and then it just stopped and stalled out. It's a little bit different here for 1 to 2 million, but I mean, really, this is a flat curve. Normally, we are used to seeing much bigger spring response in our market, and we just really didn't see any of that this year. So, think of this as like supply in the marketplace. This is demand. And, again, when we were talking about a cooling trend, we saw a slip in demand. and then it rebounded a bit and rebounded again last week, rebounded down here. This is our new contracts, right? So in the last 2 weeks, how many houses went under contract? And what you notice is if you draw a trend line through this, I mean, this has really been incredibly steady demand in both of these price ranges. I mean, we just haven't seen huge amounts of variance in demand. We saw what we looked like was an easing trend. It rebounded a little bit. Now it's pretty sticky. When we look at our absorption rate, though, I think, compared to the spring and moments in the spring, this feels better. But we're at a point here. We've been at similar points at several spots in the spring. And if you look last week to this week, both of these categories rebounded a little bit. Also, I want to note, under $1 million, we are still over an 80% absorption rate. That is still a very competitive market. Now, it's not a hyper competitive market like here when we start bumping on this 90%, but that's still a very strong market. And even in our 1 to 2 million, that is a very strong market. If we look at our closed prices, and again, I repeat this every single time, but I think this is the most important thing to remember when you look at a slide like this is based on data that is 4 to 6 weeks old. This is not last week. This is what closed last week. This isn't what was negotiated last week. And if I look at anything, I'm gonna go off screen share here. If at the top of my data wish list for real estate data is having more up-to-date information on pricing, I don't want to have to wait 4 to 6 weeks to get that pricing data. And unfortunately, that's where we are right now. There are a couple things that could change that in the marketplace, right? One of those things is that the MLS could start allowing, and I'm going to go off in just a brief tangent so people understand how this works. When a house goes on the market, right, it has a list price. Let's say it's $1 million. And if that agent accepts an offer, let's say at $1.05 million, most of the time they will not change that list price. So the whole time while this is an escrow for 30 days, we have no real idea what price that's going to close at. All we see is that it was listed at $1 million and it is now in escrow. But that $1.05 million number, the two agents in that transaction, those are the only agents to know what price that is. So because of that, it means we don't really have a way of data. And I'm still trying to think, is there's something called proxy data, meaning something else we can look at that can sort of give us a hint on where prices are. And I mean, we can do that to a little bit of a degree, right? Like when days on market is very low, you can assume that homes are selling for list price or more. But the one thing that I think that might happen, that I would love to see happen, is if MLSs started allowing us to get aggregate pricing data for in escrow homes. So meaning I can't know what a particular house is in escrow at, but maybe I could search for a zip code and I could say, what is the average pending price in this zip code, right? And then that would tell me a lot, right? Because if the average list price is $1 million, and the average pending price is $1.1 million, well, guess what? Now I know a lot about where prices are, don't I? I know that those prices are above where the list prices are. And if I track the list prices over time and I track where we are, we can get a really good idea in the marketplace of sort of where we're seeing things on average. So, that's something we're still trying to wrap our heads around, is how can we get more up-to-date pricing information? But in the meantime, this is the graph that we have and what we have to use. So here it goes. Okay, so back in here, if we look and we divide this into 3 price ranges, right? We divide this into our 75th percentile. That's sort of like the top quarter of prices in the marketplace. Then we look at our median, which is the middle, and then our 25th percentile. So that's kind of the bottom quarter, right? And we actually see a dip in all 3 of these categories. Now, there's dips that appear in here, right? And these are little dips. They're not huge. This is just the nature of our market. I think this is noise, but I think this sort of reflects kind of where we were a month ago, kind of that notion of a market that was cooling a little bit. I don't think this is where we are right now. I think in 4 to 6 weeks, we're going to see these numbers jump up because that's just what I'm seeing in a lot of the market. We were seeing a bit of cooling. I still think our market is kind of bouncing on a little bit of a ceiling here, meaning, it goes up in prices and then we hit that sort of bump on that ceiling. And what it's going to take for those prices to go back up is something to happen, like interest rates dropping, right? Or availability going down, or any or rents going up wildly. Like we need to see something needs to happen to allow prices to go up further. And we could talk about those reasons a little bit at the end, which I'm going to do. So this is kind of an interesting stat, and we started doing this year, and I still am not entirely sure what to make of it. So this is the percent that are still active after 14 days on the market. And in this graph, lower means a more competitive market. And when I look at these numbers, I mean, these are higher numbers than we've really seen all spring in both of these price categories. You see it kind of crept up here. If you drew a trend line, it dropped, and then that trend line here, I'd say, is in an upward direction, even though there's pretty wild swings. This one is kind of our better attempt at what is the market doing at the moment. And this makes me wonder, is this a situation where we are seeing these properties, even those most recent fresh meat? This can be a lot of things when this goes up. This can be buyers being pickier, right? And I'm going to go off screen share because I want to use my hands for this. So one of the things that happens when a market is competitive is there's a couple different types of a competitive market, and I want to explain that, right? So one version of a competitive market, right, is where it doesn't matter what you put on the market. You could put up an outhouse for $500,000 and you get 25 offers on it, right? Like, people want a property, they want any property, and they're willing to write offers on it. Or you can have a market where that demand is very, very concentrated, meaning that you do see a little bit of a cooling, but not for the most desirable properties. So instead of everybody putting 20 offers on every property, some properties get very few offers or no offers, and that top 25% of properties, the most desirable ones that hit the market, they get like 20 offers on them, and everybody just swarms on that property, and it goes way over list price, whereas the other properties. So you see this huge divergence between the most desirable properties and the least desirable properties. Earlier this spring, I'd say we were in the everything gets a bunch of offers on it market. Now I think we're in the desirable things get a billion offers, and some of the less desirable things don't. Obviously, that might vary based on what category you're in. Like entry level single family home, I think there's just not enough of those houses to go around. If it's in a desirable area, it's going to get a bunch of offers no matter what. So this could indicate a market where that concentration of demand is shifting a little bit from where it's been. And I actually think that's really what we're starting to see, is that concentration of demand is shifting. That means that some of those properties might be sticking around a little bit longer, but the most desirable ones are just getting snapped up even faster. And that's the reason why when we run our days on market numbers, why these haven't seen big increases, right? Those super valuable properties, those are getting even lower numbers, and our less desirable ones are taking a little bit longer and needing a price reduction because the sellers just kind of thought anything will sell, and that may not be true anymore. So going back here to our list to close ratio, this is kind of an interesting one to me. So one of the things that we talked about is that if a market is starting to cool, you would expect to see this list to close start to fade back down towards 100%, and it hasn't. And in fact, here in our 1 to 2 million category, I am astounded. We are over 104% of list price on average. And I'm really trying to come up with what scenario I think is producing this, because I don't think it's that this market is hyper competitive. What I am wondering is, have we been in a situation so long that our close to list ratio is above 100%, meaning that people are just so used to offering over list price that now it has become a habit. And I want to tell you a story. Most of you don't have familiarity with the market in the Bay Area. I do. I have a lot of colleagues, I have a lot of friends who live up there. And one of the things that we see in that Bay Area market is that, I mean, probably for the last, gosh, 10 years even, there is just a culture in that market that, the culture that they have is that if they want to get $1.8 million for the house, they put it up for 1.4. And that's just it's a pricing culture of underprice it and tell everybody you better write big over list price. Even in markets that are not wildly fast, like it's just this thing that they do. And I'm wondering if we have normalized that behavior of underpricing so much that we're just used to it and it is now becoming part of our pricing vernacular, right? So that's kind of one theory of what might be happening and why we're seeing this persistent close over list. Because early on, what I would have told you this means is this means there's a disconnect between what sellers and agents think the property is worth and where the market is, meaning like they're always behind the times, right? So that's why you tend to see in up markets a crazy close to list ratio, because the sellers are just behind where the buyers are on this. But I'm not so sure that that's true anymore. We've been in this enough. I think we're seeing, especially in some markets like the San Fernando Valley, I think sellers are over asking on their houses. And I don't think they're seeing close to list ratios that are way over 100% anymore in that specific part of the market. I think buyers are like, you're crazy. We're still going to write a bunch of offers, but everybody's going to write 20 grand under. They're going to all write what they think it's actually worth. So, I think that this might be a normalized behavior at this point in some markets. So moving on to our days on market, we talked about that a little bit of a rebound in that $1 to $2 million. That's why I'm so amazed to see these lists to close way over. And a little bit of a rebound here, but I mean, dude, we're under 20 days. I mean, this is just kind of crazy town price days on market in that under 1 million price range. Like functionally, I just don't feel like it could go much lower than this number. Now, finally, why do I think that all of the sudden things might be moving upward a little bit? Now, if you look at our affordability of a median priced home, we see that, back here in 2018, this is our baseline, our 100% number. And you see actually all through 2021, just this steady climb, right? Until we peaked like around 118%, then it dropped off. I think that where this number needs to be at this moment in time is around 115%. And if you look here, this curve was steeper here in the spring and now it's leveled off, right? Like, in fact, that we are hitting that ceiling of where should the prices be. I think a lot of people like to talk about this notion of where should home prices be. Well, I think they should be at a point where they are in line with increases in rents and increases in wages and overall inflation. I think that's right. So I think from here, you're going to see inflationary level, payment increases. So, we got a little bit of room because mortgage rates dipped a little bit. And guess what? Buyers swooped in and drove prices up and drove demand up in the last week. That's what we're in. We're in what I'm calling a very reactive market, especially with first-time home buyers. Those sort of like 3-bedroom townhomes, entry-level single family. I mean, that is the place where the rubbers kind of meet in the road on this stuff. Anyhow, I want to thank everybody for watching. We love doing these videos. We love preparing these videos. We love keeping people informed on a weekly basis. But understand, this is for Los Angeles and Orange counties as a whole. I think last week we talked about there are a lot of micro market conditions going on right now. I still believe that's true. So the market you are in could be behaving a certain way. If you have questions about that, if you're curious about buying, if you're wondering how is the market in your neighborhood, if you're thinking about selling, reach out to us. We love to talk real estate. This is what we do. It's a lot of fun for us. And as always, definitely tune into our YouTube channel. If you're watching this on Facebook, we don't post all of our videos to Facebook. We actually sometimes post them to our business page. Sometimes we post them to personal. So, subscribe to our YouTube channel is really the only way to make sure you see all of our videos. And yeah, don't miss out on our first-time home buyer video. That comes out on Friday evenings. And that one's really just targeted towards that entry level end of the market. Anyhow, happy Wednesday, everybody. We'll see you soon.